Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on a couple of the volatile names that we've been keeping an eye on in both directions. And we are seeing a significant pullback now from the hype of the cruise lines and the airlines starting consolidation and looking for daily higher lows. I was going to be scouting bearish entries, but not really actively trading today. I kind of fell into some MJ sector trades in CGC, which went very well, but I was going to be looking short on these names tomorrow, but too late. Already happened. Pullback is underway. If I were looking at trading these names from here, it would be looking for a daily higher low. On CCL here, anything above 1363 is a daily higher low. 1914 was a key resistance that we did not break. And if we compare that to sector peer RCL, RCL got to the high of the COVID bounce. The pullback is less significant. So just comparing those two names, I would say that RCL is clearly stronger than CCL at this current point. I would be more comfortable on a short of RCL if, let's say, we open tomorrow at 52.50 and we drop down and break the low of today. That would be an inside bar bear break, and then daily consolidation would be underway. So I look at this setup and I say, okay, there's still a potential short trade there, but I look at CCL and I say, nah, that's too much pullback from the high yesterday, and we were even higher pre-market yesterday, if I recall correctly. But this percentage pullback would be chasing for me if I were to enter bearish after pulling back double digits in the double-digit percentage in the last 2 days. So if I were looking for a bullish entry now, I'm looking at two things. Number one, we have a level of 1582 that broke, so we're now in a little gap fill territory. There's a gap to fill at 1518. So what I would want to see is multiple things align. I would want to see a red start to tomorrow, a drop down to fill that gap, and for the hourly RSI to be oversold. The first hourly oversold conditions after a solid daily breakout is generally a good time to be watching for a bounce. You could technically say we kissed hourly oversold right at the end of the day today, but I can say that the hourly RSI will be oversold if we drop down to 1518 tomorrow. And another thing lining up is the daily 12 period exponential support. We broke above that exponential moving average, back tested and held it, and then saw the breakout. So seeing hourly oversold conditions, gap fill, and exponential support all lining up, it's a potential setup that would have me watching for the potential of a bullish entry. And that's if the trade came to me and all those stars aligned. Looking at jets and the airliners, they have temporarily topped out as well after two big gap up opens in a row. Daily inside bar, if we break 1524, we're looking at 1512. And again, at this point, failing to break the high of the initial COVID bounce, the weekly time frame is rejecting from exponential resistance, and there's a long way to go before we get a long-term momentum shift. We need a weekly trend change, which means we need to top out on this bounce, hold the low, and then see continuation. But again, at this point, a little bit more of a pullback. Let's just look at an individual name here, AAL. So similar to CCL, more of a pullback than I would be comfortable entering bearish at this point. So I would be watching for a daily higher low compared to 963. We still have 10, 12, 13% before we drop down to that key support level. And for jets, that daily support, anything above 1351 is a higher low. And that is roughly 8% or so. So keeping an eye out for these sectors to give us a daily higher low, but it would just be for a short-term little bounce, as I would not expect daily continuation from here. I would be watching for a daily lower high. So let's just say we get a little bit of weakness on CCL tomorrow. Daily bounce starts. I'm going to be looking for a daily lower high compared to 1816. So I would be fairly quick to be locking in any bullish profit. Also looking bearish on these gaming names that have been flying. And Penn is giving us a very clear bearish reversal candle today. The most important short-term support is 28.31, and we already pulled back 10%, roughly 10% from the high of the day. So I look at this setup and I say, okay, what do I want to see for an entry? If I were going to enter bearish here, I would want to see a morning bounce, an inability to break the high of yesterday, which is an hourly lower high, and then the bears would have to follow through to change the hourly trend. We would need to see the lower high and lower low to confirm an hourly downtrend, and confirm more significant daily consolidation would then be underway. When's the last time we confirmed an hourly downtrend? We did do it a couple days ago. No bear follow through, bigger picture. But when I look at this weekly time frame and how much we have run, I say, what's the most likely scenario? V-shaped recovery of 1,000% to break 39.18, or a weekly lower high compared to 39.18, and the need for a weekly higher low to cool things off after such a massive run. DKNG, Blue Sky Bull, also in the same category here with sports betting. Watching for a potential volume climax. Upper wick, but on the hourly chart, we're still in an uptrend. So again, same thing. What I would want to see is a top fishing play. I want to see morning bulls show up, push it up to 38.50, and then I set my stop at above 39.60. Again, looking for a loss of the hourly uptrend for the bearish play to play out. If that were to happen, I would then zoom out and look for daily consolidation and plenty of space for a daily higher low to form. So again, if I am looking bearish, I'm certainly covering, anticipating a daily higher low is going to form. The daily 12-period exponential support has been a great guide for multiple months. So it would be a shorter term trade, but the setup has to come to me. If we open lower tomorrow, I have no interest in shorting this name. I have the clear setup. What would be the best risk to reward scenario for me? And if I do not get that setup, kick it out the door, on to the next trade. Has to come to me. Has to be in my wheelhouse of exactly what I'm looking for. There are thousands of tickers to trade out there. Don't go chasing trades. Set the criteria for the trade to come to you, and if it doesn't, kick it to the curb. So let's just say that scenario, what would my risk be? 38.50, and I go short on a morning bull move. My risk would be $1.20, we'll call it, giving some wiggle room above the high of today. And what would my reward be? 38.50. And if we drop down and break the low of the end of the day today, 36.57, right there, that's just $2. So risk of $1.20, reward of at least $2, because we would have to break that support level to even get the follow-through move that I'm looking for. So roughly 2 or 3 to 1 risk to reward, which is what I'm looking for in a trade. VTIQ, worth paying attention to here. High of the breakout, low of the pullback. We were watching for the bounce, and I just missed. That was a fumble of execution for me because I got stopped out. I was making a play off of 2050 for the daily higher low off of daily 12-period exponential support, and I did get stopped out right near the low and did not find a point that I liked for a good re-entry. So I had to watch that one go. And that's the kind of thing, again, I always talk about psychology. I can look at that and say, darn, I missed out and I blew it and I missed these gains and count all the imaginary money I could have made. Or that's the negative way to look at it. Or I could say, I nailed it. Didn't nail it, but I was right on point with what I was looking for. The setup was there. I knew to be looking for my first trade on this name after significant consolidation, and I just barely missed. Next time this trade comes around, I'll make some little adjustments and I'll hit it out of the park. That's the positive mindset, and in my opinion, the more you can spin things positively versus negatively in this game, the better you're going to do. Otherwise, it's just this negative, compounding, never-ending cycle, and we cannot put ourselves in that headspace. So VTIQ, if this inside bar breaks bearish tomorrow, if we see a bear break of 27.50, we can say our lower high has been set. Some fundamental news to be aware of. So this is the potential, I believe it's a reverse merger, but the electric truck company, I believe it's Nikola. I don't know much about the fundamentals. I'm really just interested in the hype. And when I start hearing friends of friends who have never traded a stock talking about buying this stock, and I see the percentage run that went on, I say, okay, this is a hype euphoria name. I know how to play these kinds of markets. So we're watching for the equilibrium, keeping in mind that in early June, we're looking for a ticker change and for this deal to go through. And it's a known event. So it's a potential sell the news event, but I will only look for it to be a sell the news event if we run significantly bullish into that day. So if we break bearish, our daily lower high is set, and we then look for a higher low for this equilibrium. So there is one more potential bull entry where I can be looking for a higher low. I can be using 2020 as a stop, keeping in mind that the volatile moves here percentage-wise are significant, so I would need to use a smaller capital position to account for that. I'm not going to use my normal day trade position size if my risk is 15% before I would get stopped out. But daily 12-period exponential support is a visual guide, looking for a daily higher low if the inside bar breaks bearish. And then if we can get in a position that we like for a bullish entry, and then obviously ideally breaking bullish from a tightening daily range, This name has been breaking out. It has hype around it. Question is, how will this tightening daily range break? First things first, we have to set this lower high. So if we get a bear break into next week, I will start potentially scouting a daily higher low entry. Tesla. So I had a swing position on Tesla that I got stopped out on yesterday for that long lower wick. And I'm not really that bummed about getting stopped out because the bears proved something to me. I made a bull entry back here. And the reason I made the bull entry was a short-term bear break with zero follow through and a very impressive bull move in response to that short-term bear break. But the bears were very impressive in the following days. We had resistance of 834.72. We topped out at 834.60. The bears defended that resistance very well. And as long as that resistance remains, that double top, the bears are comfortable. And they'll keep piling in their top fishing shorts as long as that is resistance. If that level breaks, we can definitely see a little mini short squeeze happen. But bigger picture, not ruling out the possibility that we're just going to form a long, drawn-out, tightening weekly range, which is what I would expect as the most likely scenario. When you see that kind of pullback from, let's just round up $1,000, you're pulling back 60%. And then to bounce 200% to go straight to a higher high, it's possible, but it's not the most likely scenario. And if it were going to be, we would need to be seeing increasing bull volume on this weekly time frame as we approach resistance. Again, the analogy that I use is, imagine you're driving a car to resistance, and the resistance is a barricade. And are you going to bust through that barricade on declining acceleration, on declining volume? No. You have to see increasing acceleration, increasing volume to blow through that resistance. So volume is tightening up, or the volume is dropping off as we tighten up. But if we see further bearish action, if we drop down and break 785 and 763 supports, then the scenario of a weekly lower high being set will certainly be playing out. And then we'll be watching for a weekly higher low to form, and there's a whole lot of space where that could happen. So it's a very key and critical battleground going on right now for Tesla, and that's why things are so tight right now. The average volume's dropping off, and in my opinion, we're going to see a very nice volatility spike. Don't know what direction, but when this break does occur, and when the volume starts spiking back over consistently above the 20-day average volume, which is going to happen within probably a week in my opinion, there's going to be some nice day trading volatility, and I will be back on day trading Tesla more often. I've certainly slowed down. I was trading Tesla like a madman back here. I was trading Tesla significantly here, and now I have not been trading Tesla, day trading Tesla at all during this a little bit, but not much comparatively, because again, less volatility means less opportunity. So we pump the brakes, a lot of car analogies here, pump the brakes when there is less opportunity because there's less volatility and less volume. So keeping an eye on a spike here. And another factor is I can say to myself, okay, the S&P 500 today hit the high of the entire COVID bounce. If a very strong market, granted we're trading on the NASDAQ, but there's still correlation there. If we're in a very strong market and the market the last couple days has been proving strength to us and we're not seeing resistances break, what's going to happen to Tesla if we see daily or weekly consolidation in the S&P 500? And my answer is, well, the bulls aren't going to be positioned very well for that, and we would likely see these short-term supports break if we get 2-3 days red in the S&P 500 in a row. So lots to be watching in all of these names. This is probably too much for me to be watching on a any given day basis. I would pick 2 or 3 setups that I like out of this and write them down if that helps me visualize what I'm looking for the trade to come to me, and then striking once they do. Have a good day. Peas are getting very big, and they've got a nice staggered accidental setup here where there's 3 different varieties. This variety is smallest and producing first. I've already eaten a bunch of dozen peas off of those guys. These guys are medium sized and their peas haven't started coming on yet. And then we've got the biggest here, and their peas haven't started to come in either. Actually, they're just starting. I haven't eaten any, but you can see they're cool and purple. Sugar snap peas. Getting my daily supplements of some dill and basil and cilantro. Cilantro is good for removing heavy metal and toxins from the blood.